All right. Hey, everybody. Jeremy here. It is Sunday, May 19th, about 8 p.m., and we are here to do our Sunday market bias update report. So, starting right off, let me share my screen and let's review the previous trading week. As you can see here for last week, I only had two trades that I actually placed in the futures market here. One of them was a loss of 29.25 on silver. And the second one was closed at a zero net gain or loss on palladium, front running the breakout that did not transpire. And then I got back in actually here a few days later, and I'm actually currently up about 1,200 on that. As the silver position here, even though I got tapped out on volatility on economic data last week for about a 3K loss, you can see just down below to start this week, just a couple hours ago, I did lock in over $8,000 in gains. And I did another day trade here just a few minutes ago and locked in another 450. So even though I did not get the move I was anticipating here and got wicked out on the volatility with the economic data, we'll be having a good trading week to start this week, it looks like. And also very, very bullish on Bitcoin. So expecting that position to pay me out as well. So overall, total loss for last week was 29.25, and now looking out to this week, let's dive right into the charts. So looking at the futures market, it is 7:14 p.m., so it has been open for about 4 hours. And as you can see right here, we have a gorgeous high base developing on the S&P 500, and it is right at our previous all-time high. So a break above this level and a close above would be our signal that the bulls are continuing, and it will be off to the races once again. Now, a little bit of a cautionary tale on this, though. We are seeing decreasing volume, meaning there are less people participating in this upward move. And we are also overextended on our daily RSI, meaning that we might need to take a little bit of time off here for the next leg to have any staying power. But you can't argue with the technicals, and the technicals of the price chart, with price being ultimately king, is saying that we should expect higher prices in the coming days and couple of weeks. So moving on to the NASDAQ. NASDAQ, basically exact same story, very similar pattern on our volume, slight decrease over the consolidation here, going from the previous high down to the consolidation and correction low over the last few weeks. We've reclaimed that, again, consolidating just underneath overhead resistance at our all-time high and threatening to try to break out. Going out to the Russell 2000. This one has a little bit of catch up. We're going to put this on a weekly chart, and you can see that we are nowhere near our all-time highs. Our all-time highs are way up here at about 2450. We are about 2100. We do have some overhead resistance at previous pivot high here around 2170. And I would love to see this thing on the daily chart take another day or two off before trying to move higher. If it does take a day or two off here before moving higher, it would allow this RSI to reset slightly, and then we would have a nice potential trade back up to 2167, equal to our all-time high, or excuse me, not all-time high, previous pivot high. Next out, going to Dow Jones, rinse and repeat, basically the exact same conversation from the S&P 500 and the NASDAQ, pushing to all-time highs, a little bit overextended on the RSI, decreasing volume. Would love to see more consolidation here underneath this line and then a break above. We'll see if we get that. Moving on to Bitcoin. This is the most gorgeous Bitcoin chart that we have probably seen really since back right here. This high base breakout, this was actually where on 2/18 I released the video to YouTube saying that I was ultra bullish on Bitcoin and saw much higher prices coming in the near future. We got our breakout and a massive run up to all-time highs of 74,000 and change. And since then, we have been in a fairly nasty correction consolidation pattern here. Now, couple of quick things to look at. Let me grab my Epic pen here so we can do some drawing on the chart, because this is really important. So if we are looking at the chart here, there we go. First things first, you will notice that we do have overhead diagonal resistance that we have not broken out of yet. We had this kind of long-term, big, bullish flag-based pattern. We have consolidated between our parallel upper resistance and lower support. And if we toss this out to a weekly chart, you will see what I'm talking about. And now we are threatening to break out of that diagonal level. And if we do, which it looks like we are trying to do literally as we speak, this will be off to the races once again. Next stop back up to previous all-time high of 74,000, and then most likely out to 80 or 82.5. Somewhere right in there is my next set of targets, being a little bit more conservative on it. So jumping back to the daily chart, one thing I really want to point out here is that we have a really nice head and shoulders pattern right here with our neckline that is in the process of breaking. And this is a bottoming formation that shows that you are setting lower highs and lower lows, which is what defines a downtrend. And then that broke. Our lowest low is here. We've now set a higher low instead of lower low. And we had a high here that has now been broken. So this is already a higher high. So when you have higher highs and higher lows, what does that look like? It's an uptrend. So with all of that said, I do believe that we are just now in the process of starting our next leg of the bullish uptrend. And I am expecting that we are going to see some pretty significant price action in the week ahead. So very bullish on Bitcoin. Moving on to Ethereum. Looking at Ethereum, it has not had quite as much love as Bitcoin does. So looking forward, we do have nice support down below us. We are in the process of threatening our diagonal resistance. We have reclaimed our moving averages, and the 9-period moving average here is starting to curl up on the daily chart. So I don't hate the look of this, but if I'm going to play in the crypto space, I like the Bitcoin chart much, much better. Going out to gold. Gold continuing its tear higher here, done nothing wrong. It is pushing all-time highs right now with momentum. It is slightly overextended, but as we can see here, that doesn't mean a whole lot. It can run quite a bit while still being overextended. So where this will stop, no one knows. My eyes immediately gravitate up to the round hole number of 2,600. Whether we get that in one push, or if we stall out here, take a little break underneath the 2450 level and then move higher, doesn't really matter one way or the other. I already have gold positions. I'm already playing it, but I would really, really like to see this thing just chill. Just chill, take a nap, give us a really clean break of ultimate resistance here that we can trigger in above and a clear place to put our stop below it for a low risk trade. And I will be really interested in adding to my positions here on gold. And very similar story going out to silver. Silver on a monstrous tear. And I am actually kind of pissed off that I closed out my position here actually just a couple hours ago on the open chart, because we had done this on the daily chart and we're just going parabolic, and we started to get a little consolidation here, and I thought, hey, this is a great opportunity for it to come back, pull back into our 20 period on the intraday chart and give me a new entry to lock in some gains and then reload for the next push. Didn't do it. Instead, it just broke out and kept running and is still running. So I'm a little bitter right now that I am missing out on the next leg of this on the intraday chart. On the daily chart, we are overextended, but if we toss this out to a monthly, you can see we have broken above the $30 mark here, which was multi-year consolidation. And honestly, we should be conservatively targeting up to about 35, if not beyond. So I was really hoping that I would get a double tap here and be able to play that for round 2, but might not get it. any pullback on the daily, or honestly, even on the intraday 4-hour chart here, should be playable on silver. Looking for any kind of secondary pattern above and beyond this breakout should be playable. Lots of room to the upside, and really liking what I'm seeing. Similarly, going out to palladium, it has been a little bit since we have talked about palladium with any seriousness, and we are getting a really nice pattern here. We kind of had a double bottom W pattern here, breaking out, getting back above the 50-period moving average right here, just under 1,020, getting the break above. I see this fairly easily coming up to our diagonal resistance around 1060, and then I am targeting up to about 1070, just underneath the 200-period moving average. Of all of the charts so far, honestly, I really like this palladium trade the most. You can see I actually have orders on this right now, and I am actively in this trade, just for full disclosure. And then finally, let's go out to crude light. We've been tracking crude light's progress here for quite a while now. We played a lot of this bullish move, and it's taken some serious time off. I really like an aggressive trigger above the 200-period daily here, which also equates to our moving averages on the weekly time frame. If we can get 1 or 2 more days of consolidation, this 9 EMA on the weekly chart to come down and converge in the same location as this daily 200, and then a breakout from there, I think it's a real quick, easy play back up to, what is that, about 82, where the 50-period moving average is. And if we clear that, a real quick trip back up to 84, I do believe we are about to start stair-stepping our way back up to previous pivot or beyond. So I am very, very interested in playing crude here and just tracking it for an entry. With that, guys, let's go out, last but not least, look at our heat map. You can see this is a 1-week performance. Looking at last week's performance, we had a lot of activity in semiconductors. That looked really good. Healthcare has also been looking really good. And utilities has been sneaky the last 2 months and has just been on a tear. So of these, I am most interested in semiconductors, and then precious metals and industrial metals. And then secondarily interested in oil. Those are the areas of the market that I am most enthralled with right now, and will be looking for trades personally. And now, finally, if we go out to factory Forex and look at our economic data coming out for the week ahead, you can see light data this week, which is really nice. That means we will probably be trading much more technically driven than news driven, which is really, really good given the fact that we have a bunch of breakouts lining up in the market. On Wednesday, we do have FOMC meeting minutes. Thursday, unemployment claims will be important, and services PMI data. And Friday, revised consumer sentiment. So pretty light week on that. As always, guys, let me know if you have any questions. Hit me up in the comments. Join the Facebook group. I'll put a link in the description if you want to join our free Facebook group. And if you like the information that I put out here and you want to learn how to take advantage of the markets and trade, I have been a full-time trader for almost 8 years now. This is my full-time gig, and I have just recently launched Escape Velocity Trading's Fast Track to Trading Success program, and that is meant to take you from ground zero, you know nothing about the markets, all the way through to being able to be a full-time trader if you choose, or at least being able to trade actively enough to supplement your monthly income with consistency. So if that is interesting to you, then a link in the description. And with that, guys, I will see you next week.